Hello, this is Edmund Shing from BCS Asset Management looking at key market themes for the week of the 21st of August. 4 themes. Firstly, macro, looking at a better US outlook. Secondly, stock markets, where tech and financial sectors have hit a new high. Thirdly, commodities, where crude oil may have found a bottom at last. And fourthly, risks, with the VIX volatility index not far off lows. This could signal complacency in the market. On the macro side, here on page 4 we have the market US manufacturing PMI survey in black, which is hitting a new high, showing renewed manufacturing momentum in the US economy, and that the ISM manufacturing survey should follow. So this is good news. Secondly, we have initial jobless claims continuing to fall and close to a cyclical low. Again, good news on employment. But thirdly, one reason why the Fed may not need to move and raise rates anytime soon is the high level of underemployment, which is unemployment plus people who are part-time but want to work full-time. This is still at a very high historical 12.2%, well above where it was in previous cycles. So really, there's no wage inflation while underemployment remains this high. And finally, on the macro side, the German 10-year bond yields, having started the year at 2%, is now down at under 1%, flagging up deflation risk in the Eurozone and the need for the European Central Bank to do something to help the economy. On stock markets, here on page 9, we can see that the technology sector in black and the financial sector in yellow have hit new highs, showing strong momentum in the market. But that defensive sectors such as utilities and consumer staples continue to lag this advance. In Europe, we see huge potential for rebound from the German DAX index. You can see here it has underperformed since the middle of June, the world index, by over 8%, and it's starting to recover now. I think this is a good bet going forwards. Thirdly, now on commodities. Crude oil has gone from $114 a barrel on Brent to $102 a barrel, but is now looking like it might be finding a floor and rebounding. This, I think, is good news for oil services and oil exploration companies, which again have had a good year up until the end of June and are now rebounding in line with the crude oil price. I think there's further to come here. And as you can see from this chart on page 15, seasonality is positive for energy stocks from the end of August. They tend to perform very well until the end of the year. The key risk here is looking at the midterm volatility index, the VXV, which has fallen quite sharply and is now down to 13.5. Under 13, I would say that this starts to signal complacency, i.e. that the market is not pricing in risks such as geopolitical risks. Looking at US retail sentiment, it is also extremely high, and that usually suggests that we are close to a market top, so some signs of worry starting to appear for the stock market. So in summary, US economic recovery seems to be improving, but high underemployment means the Fed does not need to raise rates imminently. The risk on recovery is driving both tech and financials in the US to new highs, with European stocks, particularly German stocks, still looking to recover further. But this, of course, would be helped by any movement from the European Central Bank. And there's an opportunity to look at oil stocks, particularly oil services and oil exploration stocks again, as Brent crude bottoms and looks to rebound. The key risk, remember, watch for the midterm VIX index, the VXV, to dip under 13. Then the risk return profile for the stock market may be less favourable going forwards. This is Edmund Shing from BCS Asset Management saying have a good weekend.